All right, so we're gonna jump right in. Share my screen. Can everybody see my screen?
Yes.
Okay. You still got people coming in, y'all. Hold on. All right, Kara, Candace, if y'all get any messages that people are trying to get in, please just stop me because still quite a few people coming in. And I'm trying to see my own screen.
If you need me to be host, I can.
I think it's gonna make me stop sharing. No. So I'm gonna try it for now, Kara.
Okay.
I'll let you know. Okay, so tonight we're talking about common tax documents, the client intake process, and due diligence. So tonight we're going to learn more about the forms that you guys will need to be getting familiar with as we move forward. There are a lot of tax documents. There is no way, of course, that I can go over every single one. Again, this course is more elaborated on in the school group, but I did pick out a lot of common forms that you can expect to see as a new tax preparer and that you just kind of commonly see. Is always going to be exceptions to the rules or to the scenario for the type of clientele you may have that you will get other things. And that's why I want you guys to make sure that you go actually to the school group. And even if you don't have time to just kind of go through it, familiarize yourself with where it is. So when you get a document, something is unfamiliar, you will be able to research in the Circular 230, or you can refer back to the school group because it's going to break down what that form is, what it does, explain, how to input it, what client it is appropriate for. So this session will provide actionable insights and best practice to ensure compliance, mitigate risk, and deliver the highest level of professional service to your clients. We are dedicated to helping you achieve excellence in every return you file. And one thing I want to say that I cannot really say enough is here in this umbrella under Suite Revenue, under the Financial Paramedic, under Lux Tax Pro, in any office that is associated with us, we are big on making sure that we do things right and that we are ethical. It's a lot of stuff as you get into this industry that you guys may see, that you will hear, and even during tax season, if you are in tax groups and stuff like that, like you'll see people doing things just maybe not the right way. And people aren't always trained the right way. Some people don't even know that they're doing things inappropriately or incorrectly because they are chasing a dollar. But at the end of the day, when you bring value, money will chase you. You don't have to scam. You don't have to cut corners. You don't have to do things inappropriately to be able to earn money. So as long as you prove yourself to be trusted and you build that trust and you establish that in the community, people will come to you. Okay, so the first forms that we're going to talk about is The W-2. So we know that the W-2 is the most common form. Whenever you think or say taxes, this is the first thing that we think about is the W-2. So the W-2 is pretty much given by most employers to any regular employee that is basically working, the W-2. Employers have a legal responsibility where the W-2 should be out by January 31st. We know that there are always exceptions to the rules. People lose their W-2s, people move and things like that. Most employers pretty much allow people to get their W-2s online, but there are occasionally employers or smaller employers that will mail out that document, and clients will have to wait. So if an individual worked for more than one employer during the tax year, they must have all W-2s. So that's another thing. People will come, they ready to get their refund, and people will literally say, well, I got a couple more W-2s, but I only worked there like a week or 2 weeks or whatever like that. Do I need that? We are supposed to have all of the W-2s. What people do not understand is that the W-2 is being, the information from the W-2 is being reported to the IRS. So I don't know, it's like people don't really realize that. They think if the information is given to them and then they're giving it to the IRS. That's the whole point of a transcript. So like, in previous years, if somebody want to go back and file or something happened and they don't can't find all their W-2s, they go and request a transcript. They can request a transcript because that employer has already provided this information to the IRS. So the IRS, it's almost like a test, like, let me see if you're gonna lie to me. So if we do not report all of the income, you can run the risk of having the taxpayers' refund held up, or they'll get letters from the IRS where they can be penalized for not reporting or underreporting their income. So it is our job to make sure, especially when clients are coming super early. If you got clients coming to you like mid-January, early January, before January 31st, you want to really make sure and kind of question them and interview them to make sure that they actually feel confident that they have all of their W-2s for the year. The W-4. So the W-4 is not necessarily a tax document that will be filed with the tax return, but the W-4 is the form that we fill out with our employer to tell them how much tax to withhold. So the W-4 is the form that back in the day, people would be like, well, I'm gonna claim me and my kids, I'm gonna claim me plus 4 or whatever like that. When Trump became president in 2017, he changed the W-4. So there are some changes there, but the purpose is still the same. At the end of the day, the W-4 tells your employer how much taxes to withhold. So you're gonna either say I'm single and sign, or you're going to maybe claim head of household, and then it tells you what numbers to fill in depending on how many dependents you have and how old those dependents are, or if you are claiming other people, like maybe if you are an adult and you're claiming your parent or something like that, the instructions are there. This is significant right now because the tax deadline for 2024 is actually ending on October 15th. So this is a nice takeaway for us to now be telling people, hey, are you currently filing exempt? If you're currently filing exempt, have you reviewed your W-4? The W-4 also needs to be reviewed yearly. People, they fill out, like if they've been on the same job for forever or for many years, they just fill out the W-4 and they don't think anything else about it. But things change. So if you, let's say, you started your job, and when you started your job, your kids were like 10 and 12, and you've been on that job for 10 years. So now you haven't changed your W-4. Your kids are now over the age of 17. They're in college. Your tax withholding will change. So depending on life, the W-4 should be reviewed every year. And although people often claim to not know how to fill it out appropriately, they know how to fill it out appropriately to file exempt. Okay. So this is a big thing right now because people like to when January through April is here, it's now time to pay taxes. It's not now time to fix whatever you didn't do within that year. So people a lot of times want to sit and be like, well, how can you help me? What can we do? What can I change? We can't go back and um, change time. So now is the time for us to be preparing for the upcoming tax season. So this is great information for you to take away tonight and to make posts and to educate people. So the W-4 is the form that we fill out and tell our employer how much taxes to withhold from our check. So one, if a person is filing exempt, it's now October. If they haven't paid taxes all year, they're gonna most likely be surprised, and either their refund is gonna be smaller or they're gonna owe. That's just that. So make sure you guys go back and revisit this. And like I said, all of this information is inside of the school group. Does anybody have any questions so far? Okay, Candace, and Candace is in the chat as well if anybody have questions. Next up, Social Security benefits, SSA 1099. So a lot of people, a big thing will be people will say, oh, it's Social Security, not taxable. In general, Social Security as is, if the person is only receiving Social Security, no, it's not taxable. If a taxpayer is working or earning additional monies, there is a income limit, right? So if a person earns more than what the government say that they can earn, a portion of their Social Security benefits may become taxable. And you don't have to guess about that. If the person gets Social Security, you will just get their statement for the year and you will plug it in. With the rest of the information that we plug into the system will automatically pick up if this is going to be taxable or not. So you don't have to guess. If it's not taxable, when you plug it in, nothing will change or they won't be getting a refund. But if it is taxable, you will see the refund amount change, or they may even owe a small amount. Form 1099 INT. This is interest income. This is normally given by banks, credit unions, brokerages, and other financial institutions. So if you have your money sitting somewhere and it's earning interest, your client may get a 1099 at the end of the year. If a taxpayer earns more than $10 in interest, they will receive a form 1099 INT. Form W-2G, not to be confused with the regular W-2. So when you see that W-2G, that is for certain gambling winnings. So again, not all gambling winnings are taxable, but if it is, they will have a form W-2G and you will plug it in. And hopefully they would have been and paid taxes on the monies at the time that they earned the winnings, and all of that information will be on the tax form. Form 2241, child independent care expenses. This is a very common thing, tax form. I'm always amazed at the number of people who have kids who forget about this. So if the taxpayer have children 12 years or younger, and their kids go to aftercare, daycare, they can get a credit. So they can get a credit up to $3,000 for one qualifying child, up to $6,000 for two or more. And remember that the dependent care credit is non-refundable, meaning that it will zero out the tax liability, but it does not result in a refund. So understanding these different forms also help you ask the right questions to your client, to your tax client. So if you see somebody has kids, you want to ask them, did your child go to daycare? If they are getting assistance, that doesn't count, but any monies that they actually paid out their own pocket does count and can be put onto the tax return to help lower their tax liability. Any questions about that? Form 8862, information to claim refundable credits after disallowance. So you'll see on the due diligence checklist that we have to complete with each return, we will have to ask the client, were any of these credits disallowed in the previous year? So sometimes earned income credit can be disallowed because somebody tried to claim that they didn't meet the relationship test. So maybe they tried to claim somebody as a niece or a nephew that really wasn't. Maybe they didn't meet they underreported their income. There can be multiple reasons why they can be disallowed to be able to claim a credit. And if that happens, the following year, this form has to be completed where basically they let the IRS know, yes, this was happened to me, but now I'm legit and I want to be given back the right to be able to claim this credit. The best thing about this, you should ask. Some clients, they won't know or they might not understand the terminology that you're asking them. But as long as you are electronically filing their tax return, the tax return is going to reject and force you to complete this form in the event that this did happen to them. And you would just ask the client why. So there are questions on the actual form to see what was the reason, and asking them to give permission that they feel like they are moving forward truthful and that they are now able to claim the credit. So it prevents improper payments of refundable credits while giving legitimate taxpayers a pathway to reclaim benefits they're entitled to receive. Tax preparers must exercise heightened due diligence when completing Form 8862, as subsequent denials may result in longer disallowance periods. So we want to make sure that we understand this form and that we can explain it to our tax clients, and that they understand that hopefully they're not trying to move forward in the same thing that would disallow them in the first place. Any questions about that?
I have one. Now, does that cover a certain time period, or is that ever if they've ever been denied those credits?
Just a previous year. So we'll be filing for 2025. So in 2024, they was disallowed. When you go to submit it, if you ask them, was any of these credits, and they say no, but they actually was, on the e-file is going to reject, and then we'll plug it in. If they're still not allowed, then it's going to either reject again so the credit can be removed, or they're going to end up getting a letter and the refund going to be held up. But I haven't, everybody over all the years I've been doing taxes, I never had anybody subsequently not be allowed, because we're going to be doing our due diligence. We're going to know that, okay, this is really this person's grandchild, really this person's, daughter or whatever like that. So it should be good.
Okay, thanks.
Nikhil, could you give some insight? I don't know, was this last year or the year before that this happened to you? I don't remember the whole scenario.
It happened this tax year.
Okay.
She went somewhere else the previous year, and she wasn't really clear. And the thing that I didn't know at the time was that it was for the previous tax year. So she was trying to claim her mom is what it was. So I'm assuming now that I'm learning what I'm learning, that when she tried to claim her mom the previous year, they told her that she wasn't allowed to do so. So I got the rejection this year, but I went back in because she wasn't claiming her mom this year. That's why we were confused. But to make a long story short, wherever she went before, she was trying to claim her mom and she wasn't allowed to for whatever reason, and it did pop up.
Okay. So yeah, and a lot of times, guys, if we can, we want to ask for the prior year tax return. People won't always have it, but if you can have it, it's good because it'll help us kind of sort through some things if we're running into some problems. Form 8879 is the IRS e-file signature. This serves as an electronic signature authorization for taxpayers who file their returns electronically. This form represents the taxpayer legal consent to electronically file their return and confirms their agreement with all information contained within the tax return. So the client will electronically file this form, and this is why it's also important that you as the tax preparer signature will go on every tax return, and your client's signature will go on every tax return as well, that they are given permission to electronically have their taxes filed. Form 8879 includes a declaration similar to the one on paper return stating that the taxpayer has examined the return, accompanying schedules, and to the best of their knowledge and belief, they are true, correct, and complete. The form must be retained by the ERO, which is the tax preparer, for 3 years from the return date or IRS receive date, whichever is latter, making it an essential component of proper record keeping protocol. Okay, and this will be electronically captured. But when clients say, well, I trust you, can you sign it for me? Or I trust you, do X, Y, and Z. This is why you need their actual signature, and then your signature will go on there as well. Form 8867 prepares paid preparer due diligence checklist. So one thing about this, and we're going to get into the 8867 in more detail later, so I'm just going to touch on it here, and we've been kind of talking about it from week to week. It's just very significant that, so if you have been preparing taxes previously and maybe you were using Free Tax USA, you was using TurboTax, whatever, you really didn't have a responsibility. So that was a big thing. We call them ghost preparers, because they basically can put anything on the tax return, but in the section where the preparer information would go, the person's tax return would just say self-prepared. So that means whatever a tax preparer was, or a ghost preparer was putting on that return, the taxpayer was held accountable for it. So the tax preparer, the tax client may be telling the IRS, well, I didn't know, I didn't do this, I paid somebody, you know, blah, blah, blah. So now we have gotten into a space where the IRS is now hip to people preparing taxes on these platforms, and they're actually trying to get tax clients to snitch on these individuals, because if they did something wrong, it's unfair that they paid to have their taxes prepared by somebody that was negligent or incompetent or didn't really know what they were doing, or maybe knowingly did put fraud on there because they knew that it wasn't going to come back on them. The paid preparer due diligence checklist has to be completed by anybody that has a Peak 10 that are putting certain credits on there. So at the end of the day, that's why we're not doing fraudulent things. This is why we are properly interviewing our clients. This is why we are writing due diligence notes to make sure that we are doing things appropriately, because we are held accountable. So yes, we have a job to help our clients to pay as less in taxes as possible, but we also have a job to make sure that they are eligible for the credits and things that we are helping them with. So again, every credit that we put on a client's return that they possibly are not ineligible for, we can face up to a $600 fee. are fine. And it's really more than 600. It might be like 650 or something like that. It's more than 600. But this is why, again, at the end of the day, when you submit your returns, if you don't have a due diligence note, if you're missing the ID, if you don't have the social for all of the kids, if you don't have the mortgage interest statement, this is why we will send your tax return back to you and say, hey, you need to follow up with your client and get this information. It seems minute in the scheme of things, but when the IRS is knocking at their door and now at your door, and you can be facing thousands in penalty, it becomes very significant in importance. And you don't have to be afraid. I'm not saying that for you guys to be fearful. I just want to reiterate how important it is that we do our job. Any questions about that? Okay, we got Form 8949. This is for sales and deposition of capital assets. So to me, kind of during COVID, I really seen this form skyrocket. So mostly people who bought crypto, people who are buying stocks and things of that nature, they will have this form, the 8949 form. And this form will look pretty intimidating if you are a new tax preparer. And if you are a new tax preparer and you experience somebody with this is something that we will individually walk through with you guys, because it just depends. Like some people sell 2 or 3 stocks a year. Some people cash out all of their stocks and they could have a lot. So the form can look kind of intimidating, but the form 8949 is the form that we would complete for any client that has capital assets as far as stocks, bonds, mutual funds, and other investments. So the mortgage interest statement is the 1098. This is a form that anybody who owns a home or bought a home within a year should have. So it's a form 1098. So the big thing, a lot of people in prior years, what was that? I think it was in 2008, Obama did the home buyers credit, and people were getting like $10,000, $15,000. That is no more. But every time people buy a house, they will ask you, what are the benefits of me buying a house? I bought a house last year. How can that help me? Buying a home right now does not really help you all like that. If you bought an expensive home and you paid for it, so if somebody bought a house at the beginning of 2025 and maybe it was a $500,000 house and you trying to pay it off early, there may be a lump sum of interest that was paid, and that could be significant and it can help. But in general, there are no longer any major tax breaks associated with buying a home. And if the person earned more or paid more than $600 in interest on the home that they had in that tax year, they're going to receive this form. So on the intake form, we normally ask, do you rent or do you own? If a person say they own and they did not upload a mortgage interest statement, you're going to say, hey, do you have a mortgage interest statement? Depending on all of the other pieces of the tax return, sometimes it may make a difference, sometimes it might not. And if the person has a home that that they paid more than 750,000, then that normally is significant. So understanding Form 1098 is essential for homeowners making the standard deduction versus itemized decision, as the mortgage interest often represents the largest itemized deduction for many taxpayers. Strategic tax planning around the mortgage payments, refinancing timing, and prepayment considerations can optimize tax benefit across multiple years. So make sure as a tax preparer, if you know somebody owns, you want to ask them about this information. 1099-C. 1099-C is the cancellation of debt. This is another common form that you will see. So anybody who had debt forgiven over $600, they will have a form 1099-C. A lot of times people are unhappy about this because it is considered income. So it's kind of messed up because, of course, a lot of high income earner people may have this. So if you had large credit cards, or maybe you had a car that was totaled out or something like that, and you didn't pay it off and they charged it off, you'll get a 1099-C. But if you had a car that was $20,000 or a credit card that was $15,000, that can significantly impact your tax bracket. So sometimes I will get clients to say, well, can I just claim this next year? I don't want to do that. It's not optional. Every form that we collect from an individual or that they receive, again, this information has already been reported to the IRS. So they're doing themselves a disservice, and they really running a risk of holding up their refund or being charged interest and penalties if they're under-reporting or don't want to properly report information. Any questions about the 1099-C, cancellation of debt? So any cancellation of debt is considered income. Nikhil, is that a hand raised?
Yes, I'm sorry. Do you know if like TikTokers, do they get a cancellation of debt?
Why would they get a cancellation of debt? So,
Well, I guess I'm trying to figure out how their income is
they would
calculated.
be getting a 1099 NEC, and that's probably coming up on the next slide.
NEC. Okay, I'm skipping ahead. I'm sorry.
It's okay. So this is totally just like, it's okay for debt. Like if you had a credit card, like when they write in individuals, because you do credit too. So if they're writing an individual and they're saying, hey, I'm gonna settle with you. So let's say the debt was 30,000 and they settled and said, I'll take 2,000. You're gonna get a 1098-C for 28,000 that is considered income. And you have to report it on your taxes and pay taxes.
And I do this at work every day. I was not thinking, I meant just a 1099. But I was not even thinking when I said what I said. So sorry about that.
That's okay. And make sure you looking, because it's different forms of 1099. So this is 1099-C, 1099 miscellaneous, 1099 NEC. So don't just stop at the 1099. We got to look at the alphabets behind it.
Yes.
Okay.
Thanks.
So 1095-A, this is another big one. So health insurance. I think prior to 2017, health insurance was mandatory. If you did not have health insurance, then you were penalized for it. Right. So during that time, we was doing taxes like, oh, did you have insurance? Did you have insurance? Now, excuse me, if somebody does not have health insurance, there is no penalty. There is nothing. If you don't have no health insurance, you just don't have it. But the 1095-A is significant. So we got 1095-A, 1095-B, 1095-C. 1095, the other 1095s are provided by employers. We don't have to plug that information in. The 1095-A is a tax credit. So the government is paying monies on your behalf for you having this insurance through the marketplace. So if your income is over a certain level, you may have to pay some of that credit back. If your income is below a certain level, you may get an additional credit. So the 1095-A, if people have that, we have to have the form for that. If somebody else say I have health insurance, but I had it through my employer and it's B or C, we don't necessarily have to have that because it's not mandatory that we have health insurance. If a person has 1095-A health insurance through the marketplace, their tax return will reject. Their tax return will reject. And this is becoming so common, and people, taxpayers will say, I didn't have it, I didn't have it, I didn't have it. And we have a phone number where we can send clients to call in. We also have a website where people can go to check it out. I don't know how people are constantly accidentally getting insurance through the marketplace at some point in time, but even if they had it for only one day, the tax return will reject. And it is our job to try to help them obtain this information, because a lot of tax clients are kind of frustrated. They swear they didn't have it, and then they come back like, oh, I got my 1095-A. It's like, oh, well, I thought you didn't have it. So if we can sometimes force it through, but if you force the tax return through saying there is a button that will basically say nobody in the household had a 1095-A, again, we run the risk of holding up the tax refund. So if we're going to be getting paid from the tax refund, we don't want to be doing anything that can possibly hold up the tax refund, because we can run the risk of not being paid at all. So it's best to really make sure and do our due diligence to see if clients had this information or not. Have anybody had any run-ins with the 1095-A on here? Whether it was with yourself or for a client, because this is becoming a big thing within the recent years.
A lot, yes. That's why I wanted the number. So she gonna give me the number, because that's a big thing. Like you said, it's been getting denied immediately, like soon as.
Yeah, even in prior years, it used to go through, and then they would just send the taxpayer a letter and say, you need to send in this information. Now they're totally blocking it. So it's very significant. So we want to ask our clients, did you have health insurance? Okay, if you did you have it through the marketplace? No. If you didn't, how did you have it? All right. I kind of see the messages going up in the chat, but I'm not seeing. Okay. Form 1098E is student loan interest. So financial institutions and student loan service issuers for Form 1098E to borrowers who pay $600 or more in student loan interest during the tax year. This form enables taxpayers to claim student loan interest up to $2,500 annually. So another big thing, everybody's student loans kind of went back into repayment this year. So this is something that we want to ask. This can help lower clients' tax liability, especially if you have clients who maybe owe or they're not getting back as much as they thought. You want to ask your clients about this. A lot of times the student loan servicers will send out the interest statements kind of early, and I feel like people forget about them. So the 1098E is the form. And again, this is another form that a client cannot tell you, oh yeah, I did pay. I probably paid like $500 in interest, and you can plug it in. We need to actually have the documents from the student loan servicer to be able to give them the credit. Form 1098T, the tuition statement. This is the form that is going to allow the taxpayer to get either the lifetime learning credit or the American Opportunity credit. The American Opportunity credit can result in a refund up to $1,000 or add on to the refund up to $1,000. The lifetime learning can reduce the tax liability by up to $2,000. Again, they need to have the 1098T tuition statement from an accredited university. Not every school has the accreditation or the option to be able to provide a 1098T. So if a taxpayer tell you that they were in school, we need to actually have the form. The 1099G and 1099 NEC. Our 1099G is for certain government payments to individuals, most commonly unemployment compensation and state or local income tax refund. So unemployment is fully taxable. And if a taxpayer got unemployment for any amount of time, they need to provide the 1099-G. And a lot of times that form can just be pulled off a line. It won't be mailed to them. They normally can create a login, and usually if they get unemployment, they have that login, and that same login will give them access to their statement for the year. And then the other one is the 1099-G for some state income tax. Income taxes can be taxable. Depending on if the person itemized deductions in the prior year or if they received a tax benefit from state and local tax deductions. So if they have this information, you plug it in to the system, because that will vary based on what their prior year tax situation was for the state and local income tax. But all of the 1099-G, if they didn't have taxes withheld, they have the option to have taxes withheld from their from their unemployment, the same way that people have the option to have taxes withheld from their paycheck. The 1099 NEC, non-employee compensation. The 1099 NEC specifically reports payments of $600 or more to employees for services performed in the course of a trade or a business. So the 1099 NEC came into play in 2020. Before, we just only had the 1099 miscellaneous. So we're going to talk about that. I think that might be next. But the 1099 should pretty much be the form that is given to employees who are acting as independent contractors, are providing freelance services. This is what they should be getting versus a 1099 miscellaneous. I do sometimes see people with a 1099 miscellaneous, and I can always tell that this is like a small business. They don't really know it should be a 1099 NEC. And they both work the same way, per se. So the 1099 miscellaneous reports various type of income not covered by other 1099 forms, including rents, royalties, prizes and awards, medical and healthcare payments, and attorney fees. So the 1099 miscellaneous is more so for other money. Sometimes people who get scholarships or get grants, they may be taxable. It will come on a 1099 miscellaneous. People who are authors or do music, getting royalties, those type of things most likely come on 1099 miscellaneous versus you being an independent contractor. So that's kind of the biggest difference between the NEC and the miscellaneous. The miscellaneous should be kind of for every other type of income that's being paid out that's not for like freelance service or independent contracting. You got the 1099 dividends or the 1099 DIV, which is reports dividends and distributions received from stocks, mutual funds, and other investments. This form distinguishes between ordinary dividends, qualified dividends, capital gains distributions, and non-dividend distributions. Understanding qualified dividend requirements. The investment must be held for more than 60 days during the 121-day period beginning 60 days before the ex-dividend date is essential for tax planning. So the 1099 DIV, it's not so common. I see it a lot with my clientele, but the average person won't have that, but you just need to know. And it's gonna just basically, you're gonna plug it in and it's taxed differently than your regular earned income. Form 1099-K is payment through card and third-party network transactions. So individuals who have like payment processors, you have Shopify, you have Stripe, things of that nature, and you're taking payments. they're gonna issue a Form 1099-K to you. Form 1099-K reports card transactions and third-party payment network transactions, PayPal, Venmo, Square, etc. for business activities. Originally, third-party settlement organizations were required to report transactions exceeding 20,000 and 200 transactions. Recent legislation lowered the threshold to 600 with no transaction count required. I believe for 2025 that this is supposed to increase back up, but as we get closer to the end of the year, whatever updates are coming, you guys will know. But as of right now, it was lowered to 600. Any questions? Okay, so that will kind of conclude our common tax forms. And again, there are a lot more forms, but we would be here all night if I went through every single one. So make sure you log into the school community and you go into the course that says common tax form and you familiarize yourself. So we're going to get into the client intake process that serves as a bridge between theoretical knowledge of tax forms and practical application of professional tax preparation. It establishes the foundation for the preparer-client relationship, sets expectations for communication and documentation, and creates the organized framework necessary for efficient, accurate tax preparation. Excellence in tax preparation begins not with software proficiency or tax code knowledge, but with methodical intake process that ensures every relevant detail is captured, verified, and properly documented from the first client contact. Okay, so we kind of knowing the forms that we're looking for, we're understanding what those forms are about. Based on what those forms are about, we know more questions that we should be asking our clients. So for the client intake process, we have the initial contact and lead capture. So whether that's through referral, social media, however this person found you, we want to respond within 24 hours and provide clear next steps to demonstrate attentive and organization. So if you are a person, when you reach out to somebody, if you like a prompt response, drop me a 100 in the chat. Do y'all like when you reach out to somebody and they respond to you quickly? How does that make you feel? Anybody want to come off of mute and share how that make you feel? If you reaching out to somebody, you want your brows done, your lashes done, you got a date on Friday, you going out with your girls, and you see this person, how does that make you feel?
It made me feel good due to the fact that they mean business. They want to make sure that they send somebody else out there happy and proud. It made me feel good just to know that it's somebody out there that mean business. They could reply promptly. I won't have to wait 48 hours just for somebody and be looking on a go for somebody else. That just means that they very professional, prompt.
Exactly. Thank you, Dangetta. Yes. And me personally, if any of y'all found me on social media or anything like that, y'all know that I try my best to respond quickly to people. So that says a lot when you can. I know sometimes we can't. I know life be happening, but you can miss a lot of business by not being responsive quickly. So we want to make sure that we're doing that with our initial contact. And then once we get the client in, if we're going to go ahead and prepare their taxes, we need to verify their identity. So one, I want to step back. I want you guys to really be thinking about now from week to week, we've been talking about getting clients. We've been talking about how we going to handle those clients, how we going to house those clients. So now we really getting into what are my SOPs, standard operating procedures gonna look like? Once a person reach out to you, what's next? So in this moment, if a client is reaching out to you and you don't know what's next, we want to know how we can help you. Okay, and then once they moving forward, where we at the point where we're really ready to actually start preparing their taxes, now we want to look at this, what this person is saying. We want to be able to capture their information. So sometimes people will kind of come to you and test you out, because honestly, some people are looking for fraud. Some people don't care. Like, I'm looking for the biggest refund, possible. And sometimes when you're honest with people about how you move and how you operate, they're not going to want to deal with you, but all money, not good money. So we're always doing what we need to do. And also, I truly believe that the IRS is like, I'm going to say fishing, so to speak. There are being baits and traps put out there to see if people will take it. The IRS is a lot more active than it used to be. So the IRS mandates identity verification as part of the due diligence compliance. So once we get this client, if we moving forward, then we need to identify this client. So for every client that we're going to prepare their taxes, we need to have an unexpired ID and a social security card. We need to have a social security card, birth certificate, school documents, health insurance. You don't have to have every single one of those, but for all of the other dependents on the tax return as well. And then we will have an intake form that the client will complete. And then from the intake form, we're going to move forward with interviewing and questioning our client. And this is going to be the same steps, whether it's in person or it's virtual. The difference will just be that the person is actually sitting in your face versus maybe them sending things to you. And another thing that we have started doing is the person, so if you're doing taxes for somebody, let's say somebody reach out to you, you live in LA, and somebody from Georgia is reaching out to you. When you get their ID, you need to have their ID with a selfie of them. So y'all know, like nowadays, kind of like when you're doing different things like the IRS verification, you have to have a selfie where you holding the ID and you got a picture of yourself with your ID in front of you. So these are the same type of steps that we would be taking when we're preparing taxes virtually. So the client intake form, taxpayer information. So I just put together kind of like a basic intake form for information that we should have on our intake form. So you can create this in job form, you can create this in incognito, you can create this inside of your CRM, but this is like the basic information that we will be getting from every single client that we'll prepare taxes for. So we need their legal name, their date of birth, their social security, their current mailing address, phone number, email address, occupation, filing status. And we know, again, with the filing status, we're going to let the client plug in what they want to plug in, but we're the expert. And when we go through the interview process, we'll confirm what the filing status we're going to actually move forward with. And sometimes people will ask, well, why you need my kid's social, or why you need this, that, and the third. And it's kind of mind blowing, because I'm like, you file taxes every year. Whoever you've been filing your taxes with haven't been asking you for this information. But you'll be surprised, like, again, if people doing taxes on TurboTax, Free Tax USA, they just taking whatever the person saying. And a lot of times I have to educate my clients that I'm a tax professional and I have a legit responsibility with the IRS, and I'm not willing to take certain chances. So if you can't provide the documentation, I'm not going to be able to help you. And there again is a trust factor. So you want to make sure that you don't become offended, but that you actually use it as a terms of education to provide to the client so that they understand like what this is and why I need this, and I actually have this legal responsibility. And then a lot of times too, when you explain to them, my name will be on this form along with my identification that was issued by the IRS. So anything that is put on your tax return can be tracked back to me. That make people more comfortable as well too. If a person is married filing jointly, we need all of the same information for their spouse. Again, so the ID must be unexpired. I don't know why in this country, once the ID expires, people act like it's not you, but it's the same thing for your tax return. It's the same thing for the banks that we run through to be able to get paid. They must have an instated ID, even if they have to renew it. We can take the temporary renewal, but the ID must be unexpired for us to move forward with transmitting the actual return. If a person is, you have a taxpayer and then they're claiming another adult, they should have the ID for that adult. If they're claiming dependents, but they're 17 or under, we can just have the social or have a birth certificate or have health insurance or school documents or something like that. But any adult on the tax return, we need to have the actual ID for. Dependent information, full legal name, date of birth, social security, relationship to tax preparer, number of months lived with the taxpayer, confirmation of support provided, citizen or residency status. So all of this information that I'm going over now, from here, from the taxpayer information to the spouse to the dependent, all of this information will be on your intake form. You will give it to the client and you will allow them to fill it out, and then we'll go back and interview the client. And that's whether it's in person or virtual. After we get all the identity verification, now we want to find out about their income. Do they have W-2? Do they have 1099? Do they have unemployment? Do they have Social Security? You want to ask them about all of these things. Most of the time, like I said, if it's super early in the season, we want to kind of go through a more thorough, are you sure these are all the jobs that you worked? You know, did you do anything on the side, things of that nature. People who are coming later in the season, I mean, in like beginning mid-February, they normally have everything, but people kind of coming in January, or people who you know work a lot of jobs, or just kind of worked odd jobs, like they worked at Kroger one day, you know, 1 month, they worked at Burger King another. You want to make sure they get all of their W-2s. Then after we get all of their income, we want to start looking at their deductions. So what do they qualify for as far as tax credits? The child tax credit, earned income credit, American Opportunity Credit, child dependent, retirement savings, premium tax credit. So we talked about credits for like 2 weeks straight. Then you're looking at the deductions, the mortgage interest, the student loan, the charitable contributions, the medical expenses, state and local taxes, educator expenses, health savings account, all of that. And you can also have or create like a checklist that has these informations on it, because sometimes people just forget. So you need to be a good interviewer. A lot of times too, if they have the prior year tax return, that can help kind of jog some things that they might have forgot about. And then lastly, after we get the income and the deductions and the credit, then we want to get their banking information. We need their routing and account number, what type of account, and the name of the financial institution. And I think starting this year, stopping in September, the government, they no longer taking paper checks or issuing paper checks. So sometimes people can be like, well, I don't want to give you my banking information. Who's gonna see it? Blah, blah, blah. They're gonna have to either pick to get on a prepaid debit card, or they're gonna have to get a paper check they can get a paper check through the bank that we pay out through, but the government is not issuing any paper checks. So they're gonna have to give the information if they want their funds direct deposited, or we will be able to offer prepaid debit cards to them. Important direct deposit considerations: account must be in taxpayer name, cannot deposit into prepaid debit cards. We can do that with the banks that we go through, but not just like them going to the store and giving you a prepaid debit card. International banks may not accept direct deposits. Some financial institutions do not accept tax refunds. I don't know no institution that don't accept tax refunds. And then they will lastly sign an acknowledgement saying that the information that they provided is true and accurate to the best of their knowledge. They understand that they're responsible for the accuracy of the information provided and that penalties may apply for false or fraudulent information. Completing the intake process. So we want to review and acknowledge once all documents and information are collected, conduct a thorough review session with the client, have client sign essential documents, including comprehensive intake form, which we just went through, an engagement letter or partnership agreement defining scope of services and responsibilities and due diligence acknowledgement. Explain taxpayer responsibilities, prepare limitations, and the importance of accurate information, address questions, and clarify any areas of confusion before proceeding with the return preparation. Document completeness verification, double check that all required documents are complete, legible, and properly dated. Verify that all W-2s complete employer information and accurate withholding. Also, I cannot stress enough to make sure that the current year that we're filing for is on the tax forms. So people will submit documents and it's a lot of times it's not intentional, but they're just trying to hurry up and get filed, and they may give you a 2023 or a 2024 tax document in 2025. So make sure that you always check in to see what form am I completing and is it for the year that I'm actually filing for. Secure record keeping and data protection. Store all client documents, intake forms, and supporting material in a secure encrypted system, complying with IRS security system. Never transmit sensitive tax information via unsecured email, text message, or unencrypted platforms. So again, guys, you need to go ahead and start thinking about what systems will you use to maintain or obtain your client's data. You should have a separate email for your tax business. Your client should not be sending their tax documents to missfine29@gmail.com. So we want to have a professional tax email where they can send their information. So again, we building that trust. And you don't want to have clients' tax information just blending in with all of your information. You want to have their information somewhere that you can go to, and only that information is there. And then you don't have to look through a whole bunch of stuff to be able to find your client's information. Or when you get new information, you see it quickly. You want to create backup systems to protect against data loss and maintain disaster recovery plans. Once intake is complete and verified, update the client file status to ready for preparation and assign to the appropriate tax professional for return preparation. Form 8867, I told you we was gonna go through this again a little bit more in detail. And again, this is still just making sure that we are doing our job. Eligibility determination, income verification, record retention, and knowledge standard. We want to certify that you know or have reason to know that any information provided was false or incomplete. This knowledge test requires reasonable inquiry and professional skepticism. If red flags exist, additional documentation and verification are necessary before proceeding. So let me see, I think on the because some of this stuff is repetitious. Due diligence, best practices and professional standards, credit and status verification. Again, I cannot just drill this home enough, just making sure that we actually have the documentation for all of the credits that we are giving any taxpayer. Prepare certification and prepare signs penalties of perjury, certifying compliance with all due diligence requirements. So the preparer's full name, the preparer's firm, P10, signature, and date will be on all tax returns completed by the tax professional. Always cross-check intake forms across Form 8867 requirements to ensure consistency, independent information, income sources, addresses, and other key data points. Inconsistencies require resolution before filing. Keep due diligence documentation inside each client file where it's readily accessible during quality review or IRS examination. Remember that the due diligence protects anyone. It protects the taxpayer by ensuring they receive only credits they're entitled to receive, protects tax systems, reducing improper payments, and protects your professional practice by demonstrating adherence to the IRS requirements and professional standards. All right, so I want to thank each one of you guys for your commitment to excellence. We went over the common tax documents, the client intake process, due diligence standards. Do we have any questions or concerns tonight? Anything that I can make clear for anybody? Candace, Kara, do y'all have anything that y'all want to add?
No, ma'am, you did an amazing job as always.
Oh, I feel like I've been talking.
I think
Very
you did a
important
wonderful job, Ms.
information being
Essence.
given tonight.
Okay.
Yes, ma'am.